Thanks for joining us today as we talk about the highlights of our latest 2026 feed grain outlook and what it could mean for cattle feeders and livestock producers. I'm Marc Rosenbohm, Senior Grain and Oilseed Analyst with Terrain.
I'm Josh Freese, Vice President Corporate Protein on the beef side at Farm Credit Services of America.
As we finished the 2025 season, we ended with record corn supplies, a combination of the highest area in decades, and record yields. These two combination weighed on corn prices, and in combination with lower basis in the Western Corn Belt or Plain states, it also added to the favorable cash prices for corn for some of those livestock operations. Our forecast is for higher prices over the next 6 months on a combination of continued strong demand, the potential for lower U.S. corn supplies in the marketing year ahead, and we also think that a lot of the sizable South American crop is already priced in. In a less likely scenario for prices to go lower, we would need to see a couple things, probably a combination of weaker consumption and another year of record yields for the upcoming marketing year. Our 2026 outlook is for corn area at about 94 million acres compared to about 98.98 million acres in 2025. Relative futures prices right now point to the possibility for a few more soybean acres, adding a risk to the lower corn area and the potential for upside prices. However, there is a bit of policy risk for the soybean sector, in the export side in particular, with Chinese purchase decisions, as well as on the domestic side related to biofuel rules. All of those could mean a little bit more corn area relative to our estimate. That kind of characterizes both sides of the risk to our corn outlook. There may also be some basis risk ahead too. This year, we saw the Western Corn Belt, the states out there produce anywhere from 18 to 73% of their 5-year average. And that is one contributing factor to the low basis we saw across the region. If that normalizes in the year ahead, that could add some price basis risk on top of the other price risk that we're talking about here. Over in the protein meal space, continued growing demand for soybean oil has led to continued growth in crush and large soybean meal supplies. Those trends we expect to continue in 2026. Continued strength in ethanol production continues to keep DDG supplies up, while at the same time, Brazil continues to use more corn for ethanol there, which leaves a bit less for corn exports and higher DDG supplies, as well as continued trade competition for our DDGs in foreign markets, all of which combine to leave a bit of downward pressure on U.S. protein meal prices. Our outlook is for continued affordable protein meal prices in the months ahead. Overall, a few key risks point to the possibility of higher corn prices. The combination of fewer corn acres starts to set up the condition for that to be possible. So those are our highlights of our outlook. Josh, what are your thoughts on the outlook?
Yeah, I think we can't agree more. I think in your article, you call it the high stakes year for cattle feeders, Mark, and we do. We agree. Managing the margin on this feed stuff maybe is important or more important than the actual cattle purchases and protecting those as well. So we agree. We think that, what does it look like past 6 months? That's going to be one of the things I think that concerns a lot of our customers and how they're going to manage the feeding as they go along. So we agree. It's going to be tricky, but that's what we do it for.
Is there a couple questions or a couple concerns you
Yeah,
expect customers to maybe have?
yeah. I think a lot of commentary in the article centered around if exports remain the primary price support for corn, and South American crops really impacting our ability to expand or maintain the export market. Could this be a race to the bottom? Are we willing to drop price just to keep that export demand alive and thriving?
Yeah. So part of the export demand that we have seen has been a bit price induced. We saw low prices at harvest, and then we saw a noticeable drop in prices post January WASDE as well. So that's helped to spur some of that export business. But at the same time, our corn, at least right now, continues to be priced competitive globally. And at the same time, when you look at corn prices relative to production costs, depending on which measure you want to look at, we're in a tight margin environment now where I think it's a bit difficult ahead to see prices go much lower for much longer.
Yeah, very good. customers, cattle feeders that already have the next 6 months of physical corn needs covered. Is there a single indicator that would trigger the next big risk management play for them as they place cattle today? They're going to be on feed, 9, 12 months from now.
Yeah, there's a couple things coming up that I think they should watch, and the first is what the area the folks actually plant, what that actually comes out to be. While we're expecting 94 million, we've talked about some of those risks either side of that, as well as the big uncertainty every year, which is weather, right? That'll
Yep,
have the last say on production. And, unless we see another record year, we could see some upward pressure on those prices beyond 6 or 9 months as we get to the end of the growing season and start the next 2026-27 marketing year.
sure. Yep, very good. Thank you.
Yeah. So I have a question for you. Is there
Yeah.
anything else you think that this might mean for customers' business decisions?
Uh, you know, I think that I think I do. I think our customers are going to really start and continue to challenge how they're going to affect break evens. And I think getting this feed stuff thing, having a sound risk management plan in this feed stuff is going to be a big play in their part. I mean, calf prices are what they're going to be, but they're going to really influence their bottom line and their break evens by really having a solid handle on this feed stuff part of their portfolio. So yeah, I think if they're not doing it now, they're going to be pushed to really understand that and get a good risk management plan in place.
Excellent.
Absolutely. Yep.
Thanks, Josh. There's definitely
Yeah.
lots to consider and lots of conversations for those folks to be having with their farm credit lender.
Yep. Absolutely. And I think, as capital requirements and margin capture continue to impact the cattle industry,
Mhm.
having a lender that accepts and understands these challenges will be as important as any risk management plan. And our teams here at Farm Credit Service of America, Frontier Farm Credit, and Ag Country Farm Credit have proven that we are ready for that challenge and remain dedicated to the cattle industry.
Those are good partners for them to have.
Yep. Absolutely.
As we wrap things up, I wanted to highlight, the key points of our outlook again, and that's that supplies look adequate today, but there may be margin risk ahead from higher corn prices in 2026 and early 2027. And those anticipated shifts into fewer corn acres and normal production uncertainties set up those conditions for this to be possible. For those who want more insights on grain, livestock, dairy, or other market outlooks, and deeper insights that go beyond what we may have covered here today, visit terrainag.com.